Welcome students. Let us continue with the material cost aspects. Last class you learned EOQ and how to calculate the total cost with existing inventory policy and EOQ inventory policy. When it comes to inventory, it is very important for the organization to set the limit of maximum and minimum inventory. The reason is company does not want to invest or purchase material unnecessarily. So it has to procure so that the production of that organization is not stopped. So that is called as minimum. So the organization will not allow the stock to go below minimum. Also at the same time, it does not want to hoard the inventory. So that is the maximum. If you hold more inventory, your working capital gets locked. Your inventory carrying cost is more. Because of this, always the maximum and minimum is set in an organization. And there will be a level called reorder level. This is the quantity at which the organization will initiate procuring that material. Example here is a chart. X-axis has time in terms of reordering and consumption, and your y-axis is as the stock in units. So let's say currently the inventory is at 800. So as the consumption or the usage of inventory happens, the stock will reduce and it will come to a point of 400. So the organization has already set it as reordering level. At this point, it will initiate the ordering activities. So by the time it reaches the minimum level of 200, the stock would have been received. Again, it will go to maximum level. And this keeps on repeating. That's how organization is able to maintain the maximum and minimum level. Its production is not disrupted. Also, the inventory burden is not there. Let us understand few formulas. These are important in terms of your examination. First, understand what is reorder level. So you have two equation for reorder level. One is L minimum, which is lower limit or minimum limit, plus a product of normal rate of consumption and normal reordering period. So this rate of consumption is also called as usage. So if you get it interchangeably in the examination, don't get afraid. There is no other way. You have to remember, you have to practice these formulas. So minimum level is reordering level minus normal rate of consumption and normal reordering period. Maximum level is, so you have to add reordering quantity also. So most of the time this will be EOQ because you will order it economic order quantity. So here reordering level plus ROQ minus minimum rate of consumption and minimum reordering period. In some cases, you will not be given much of the details. So during those questions, you have to use this formula, which is maximum rate of consumption and maximum reordering period. So let us understand it with one example. In a company, weekly minimum and maximum consumption of material A are 25 and 75. So this is nothing but usage or rate of consumption. So what I will do, I'll write two data. So rate of consumption max and rate of consumption minimum. So these given us 75 and 25. With this, average rate of consumption is 75 plus 25 divided by 2, which is 50. So now you have three data. The reordering quantity as fixed by the company is 300 units. This data is already given. The material is received within 4 to 6 weeks from issue of supply order. Here also there is another set of data given, which is reordering period. So again here you have max, here you have minimum. Maximum is 6, minimum is 4. Now you have all the data required to calculate whatever is asked. Calculate minimum level and maximum level of A. So before you proceed with calculation of minimum and maximum, you have to calculate reordering level. How do you calculate reordering level? Reordering level is equal to maximum rate of consumption into maximum reordering period. So here you have to take this 75 and here you have to take 6. So 75 multiplied by 6, you have 450 units. Now you have 450 units. For the minimum level, the formula is reordering level minus average or normal RC into normal RP. So ROL is 450 minus average you have found out, which is 50, multiplied by average of these two is 5. So 450 minus 250 is 200 units. So this is your minimum level. Similarly, you have to calculate maximum level. For the maximum level, the formula is you have to know ROQ. Then you have to have ROL minus minimum RC into minimum RP. Using this, ROQ is already fixed, which is 300 plus ROL you have calculated to be 450 minus minimum is 25, minimum is, so this is 100. Using these two, you will get the answer 750 minus 100, 650 units. Here we will learn about other inventory control systems. So you have perpetual and periodic stock verification. In the perpetual, it's a continuous stock taking process. So it will be computerized and there will be barcode scanners. So whenever there is an issue or a receipt of material, the same is recorded continuously. Whereas in the periodic stock verification, at the end of a period, it can be quarter or a month or a year, manually the people will be doing the verification. And whenever there is an inventory issue and receipt, there are few analyses which define the rate or categorization of this inventory. ABC analysis says A which is highest, B middle and C as the lower value. VED analysis classifies it based on vital, essential and desirable. This is especially used for spare part analysis. Vital means without that production will stop. Essential means it will go on for a few hours. And desirable means there is no effect on the production. Similarly, FSN analysis. Next, you have classification based on rate of movement of consumption. Fast, slow, and normal. So they will define what is fast, what is slow, and what is normal. And sometimes they also have non-moving. The focus should be on to reduce slow moving and non-moving. Now let us learn about inventory turnover ratio. It is also called as stock turnover ratio. What it means? It means in a given period, how fast the turnover of inventory happens. It is given by this formula. Let us see with an example. So you have opening stock of 10,000, closing stock of 16, and material consumed 78. In the numerator of the formula, you have value of the material consumed, that is 78,000, and in the denominator, you have average stock, which is 10,000 plus 16,000 by 2. So that means you will get an inventory turnover ratio of 6 times. This signifies what is the rate or speed at which the inventory is consumed.
So if the number is high, like 7, 8, 9, that means more inventory is consumed during that period. In the valuation of material receipt, the principles are governed as per CAS 06, Cost Accounting Standard number 6, that is related to material cost. Next, you have to consider what methodology is used for material receipt, whether it is first in, first out, or last in, first out. Let's take an example. Let's say you got material input in two lot. Under FIFO, the first lot will be issued first. However, in case of LIFO, the last in the case of LIFO, it will be lot number 2 that will be issued first. Also, all directly attributable costs related to material receipt are included in cost of material. These include duties and taxes, freight inward, insurance, and other expenditures. Likewise, some of the costs are excluded from material cost. These are your finance cost, any taxes and duties that are refundable. That means if you are getting an input tax credit, that is not included in material cost. Any demurrages and detention charges, these are related with custom warehouse policies. When the material is not cleared within the date of bill of entry, so demurrage and detention charges occur. Penalties, subsidy grant, etc., which are additional, are excluded from cost of material. And any abnormal losses occurred are not considered in material cost. However, normal losses are always considered in the material cost. Self manufactured item, that means if there are two factories, so from one factory, if I am taking input material, it should include direct material, direct labor, direct expense, factory overhead, and production administration overhead as part of the material cost. Whenever a material B is being imported, then the conversion rate should be as per on the date of transaction, that foreign exchange rate that will be applicable. Next is valuation of material issue. Right now we saw valuation of material receipt. Let's learn about material issue.
Now let us see how inventory control happens. How should be the stores ledger entries for receipts and issues? This is very important. So pay attention. Typically, you will be given a data where you will have dates, then whether it's a purchase or a issue, then what are the units, then the value in case of purchase. So they may ask, prepare the stores ledger using FIFO method or LIFO method or weighted average method. Let us start with FIFO method. That means first in, first out. So let's analyze the date. So on April 1st, you have balance brought forward. What are the units? 300 and 600. So let us record that 300 units, value is 600. So unit rate is 2 rupees. Next, you have purchase, means it is a receipt. What is the unit? 200 units and value is 440. So that means you have purchased at a rate of 2.2. So when you go to the balancing here, let us record it in two different lines. One is the balance brought forward. You have the new receipt. Why you have to record it this way? The reason is when the issue happens, the first item in this balance should be issued first. This you will see when we go to the first issue, which is on 4th April. So quantity is 150. Usually the value of the issue you will have to determine. So on April 4th, unit issued is 150 and rate is I am issuing from here. So 300 units now becomes 150 and rate is 2 and amount is you have to calculate 300. So when I'm updating the balance, what I will do instead of 300, I'll record 150 and here it will be 2 rupee and this slot remains unchanged. That means I can directly copy and paste it here and the same process goes on. Next item is what? Next is a purchase for 200. So I will record 200. The rate or the value is 460. So I will have to calculate the unit rate, which is 2.3. Here I will insert two more lines. Why? These two belongs to one lot and the third lot is now 200, 2.3 and 460. Next item is issue of 150. Now I'll have to issue from this lot. Okay, 11th I will issue 150 at a rate of 2 and value is 300. Now in the balance, this line is eliminated. This is 0. So my balance is now 400 units and a value of 900. 19th, again there is an issue. I will issue from this lot and this is the remaining balance. Then again there is a purchase of 200. So the balance will be 200 from the previous lot and 200 from 22nd April lot. On 27th final transaction, there is a issue of 250. So when you have to issue 250, 200 will be issued from this and 50 will be issued from this. So remaining 150 will remain in the closing balance. So the valuation of closing inventory is 360 is the value at the rate of 2.4 per unit. Now we will also learn how this closing valuation changes if we adopt LIFO method. In the same problem, we will now look at using LIFO method. Means whatever is received last will be issued first. So this is the balance brought forward. Next transaction, we have a purchase of 200 units. So this has to be updated in the balance. First, we will take the balance brought forward. Next, followed by new receipt. Now, when is the first issue? 150 has to be issued from the last lot. That means this 200 lot. So this is on 4th April. 150 is issued. That means 50 is remaining in this lot. So when we are updating the balance, here it is 50. On 6th, there is a purchase of 200, and the value is 460, means the unit rate has to be 2.3. And the balance has to be updated accordingly. This is updated. On 11th, you have an issue of 150. So that 150 will be issued from the last lot. So 150 is issued. These two will be returned as it is. Here from 200, 150 is issued. So balance is this much. Next transaction 19th, there is an issue of 200. So 200 will be issued from these 200 will be fulfilled. Another 100 will be fulfilled from this. So this is 100. Hence 200 is still there in the inventory. Next, there is a purchase on 22nd, 200, and the rate is 2.480. So now balance, this is the balance. So now 400 units are available. Next, on 27th, there is an issue 250 units, hence 200 will be fulfilled from here and 50 will be fulfilled from here, and the balance will be 150. The same problem, we will address it through weighted average method. Weighted average method is very easy. So here, when you are computing the balance, you will calculate the weighted average rate. How do you do that? We will see. So on 1st April, you have balance brought forward, which is already there in the balance. Next, on the 2nd, there is a purchase of 200 unit. So what happens for the balance? The units get added, the values get added, and then the rate is computed. So in this case, so this is 500. Then to 600, you have to add 440. So that becomes 1040. Then you compute the rate. Next, on 4th, the transaction is there is an issue. So on 4th, you will issue 150. At what rate? Very easy. At the balance, whatever rate is calculated, at that rate, it will be added. And you update the balance. Now, 300 minus 150, you have 350. Then here it is 728. Similarly, you calculate weighted average balance. Next transaction on 6th, there is a purchase of 200. So 200 at a value of 460. So the unit rate would be 2.3. Now update the balance. You have to add these two. So this becomes 550. Then you have 728 plus 460, which is 1118. And the balance is calculated dividing the amount by units. Next transaction, there is an issue on 11th of 150. So this is 150. So value at which it is issued is the balance value. Now update 550 minus 150, 400, and the value is this minus this 864, and balance rate is 2.14. On 19th, again there is an issue of 200. So 200 is issued at the same rate, and 400 minus 200 is 200. Value is this minus 432 is 432, and balance rate is 2.14. Okay, next transaction on 22nd, there is a purchase of 200. Value is 480. So update the balance. 200 plus 200, 400, and 432 plus 480, and then compute the weighted average rate. On 27th, there is an issue of 250. So 400 minus 250 is 150 at 2.28, and 342 is the value. So when updating the balance, you have 400 minus 150, 250, 250. So this becomes 150. So 912 minus 570 is 342, and closing weighted average balance is at 2.28. So when you compare three different methods, the closing inventory valuation, which is these two values, are different in different methodology. So it is very essential for a cost accountant to disclose which type of method is used for inventory valuation of issuing. Okay, now you have learned various valuation of material of issue. Now next topic is valuation of work in progress. So once you have material in your stock, then you issue it to the production. And while the production is undergoing and not completed, such a stage is called as work in progress. So there are three common methods used to value the work in progress. They are valued at prime cost, that is direct material, direct labor, and direct expense. The second method is prime cost plus variable overhead. And the third method is at total cost. That is, you have your prime cost, then what portion of variable overhead is used, then fixed overhead. And this method is most commonly used. Let us understand some of the terminologies used with respect to material. Normal wastage of material. So whenever there is a process or manufacturing, as part of that process, there is some wastage is already there. During the normal production cycle, such wastages are bound to occur. So such things are called as normal wastage, and they are considered as part of the production cost, and such wastage is apportioned to the number of units produced. In certain cases, when the wastage is above or below the normal levels, such things are abnormal. So whenever there is an abnormal, always remember they are always charged to costing P&L account. The examples of abnormal wastage can occur due to power failure or major breakdown. Scrap. So scrap is a material residue coming out of manufacturing process. For example, let's say there is a drilling operation going on a metal piece. So the metal which is drilled, that is a scrap. So generally this scrap can be sold and the sum of the amount can be recovered. Whereas in the spoilage, the product which is under manufacturing is it is finished as a defective product and it does not meet the specification. For example, you take a mobile phone which is under manufacturing and the output mobile phone is not switching on or it is damaged. So it cannot be repaired. Hence, such products are called as spoilage, and it is not only loss of material, but also it is labor and manufacturing overheads are also lost. So this is the major difference between scrap and spoilage. Next, packing cost. So whenever there is material which we have to ship it to the consumers, customers, it has to be properly packed. So packing, there are two types of packing. One is primary packing. So such primary packing, from the material perspective, the material used for primary packing is always considered as part of your product, whereas the cost of secondary packing. So these are, let's take an example of again mobile phone. So once mobile phone is manufactured, it comes with its own packing box. So that is, it is primary container. But when it is sent to a distributor or a customer, it is again packed in another carton box. So such packing material is called a secondary, and the treatment for this is they have to be considered under selling and overhead, selling and distribution overhead. So this is with respect to material. Let us continue with employee cost.